What up, everybody? Welcome to the watch list of the week of June 16th. It's going to be a goodie. I got a lot that I want to share. But first and foremost, let's talk about last week a little bit and really specifically Friday, because I think a lot of us are good at trading trend, but a lot of people struggle with trading chop. And I understand that. That's why you probably shouldn't do it. But let's really get in depth. So first, I kind of want to recap a couple different trades. If you look at NQ right now, at this time, and the time of this candle is 6:59 a.m. Okay, this is very early morning trade that I took, and transparently, yes, I woke up in the morning. I looked at my phone. I looked at trading view. I was like, "Oh, NQ going for these lows." I ain't brushed my teeth. I ain't washed my face. I hopped out of bed in my boxes. I ran to the laptop. I said, "Yo, I'm in it." So I knew I'm like, I'm gonna make some money real quick. And I was able to make like almost $1,000 like first thing in the morning, like just coming to get into these lows. So this is the first trade. I was like, it's a good little morning wake up, stank breath and all. You feel what I'm saying? But all just aside though. So basically, if you notice that you have a clear target, we have relatively equal lows here. I know that everybody's like familiar with small mini concepts or or liquidity or anything like that. But if you have relatively equal lows, that would be like a liquidity pool. There's a sell side pool here, and price will target those lows. So we're looking to trade into these lows right now. And so you want to look for, if you know where price is heading to, you want to focus on what price could use to get there. So seeing that price is using this SIBI, meaning this bearish fair value gap, seeing price use that is a clear signal to me that, oh, we about to actually trade into these lows, because if we were bullish, we wouldn't be rejecting here, and specifically, we wouldn't be rejecting under the 50% of it in this context. So in this context, I do want it to hold under 50% of this, and we do that. Now, I didn't get in right away when it rejected this, because in the same breath, we have a bullish fair value gap right here, and I don't have faith in this bullish fair value gap, but in the market we've been trading, I've been being more cautious about waiting for confirmation. I'm like, hey, I got to start waiting for confirmation a little bit more, because as y'all can see, 2024 is we've been consolidating a lot. So it's just best to wait for consolidation and make sure that you're trading trends so you don't get caught up in chop. All right. So that's the first thing to be said. So confirmation is, yeah, we're using this bearish fair value gap to send us to a bearish direction. But at the same time, you can also wait for the invalidation of a bullish fair value gap and use that as a form of confirmation as well. So using this under the 50%, beautiful. Now, for me, I also know in this context, the fact that we closed under 50% of this fair value gap, I already know that we're not going to use it. So this is why I got in on this candle. So for me, I get on this candle, and my stop loss is if we come back above this high, because we shouldn't come back above this high. There's literally no reason to. We've already met the objective trading into this fair value gap, so there's no need to come back above it. If we do that, why would I stay in the play? Like, I'm not a person that hope and holds. I'm getting in for a very specific reason. My reason is we're rejecting under 50%. So if we come back above and close above 50%, why would I stay in the play? So that's where my stop loss is. So my entry here, stop loss there. Cool. So we're in the trade with a plan. We have a clear stop loss and we have clear targets as we're attempting to take these lows. There's also some lows, and really I already saw this from the hourly time frame. That's what made me get excited about it. I'm really looking for price to target these lows. So as you see, I have a yellow line attached to these lows all the way here that came from the previous day. All right, so cool. Now let's move over to our trade. Sorry, we're on the 30-second time frame, as you know. So we on the 30-second for this entry. This is the 30-second time frame. Boom, we in the play. Price moves our way. Everything bearish is holding, and then you still want to see bearish things hold. We have these green candles that will be ideal for us to hold that. As you see, we rejected these green candles, and now we're trading down, and we're getting really close to our target. You see that we ran these initial lows because that's what price targets. What people typically would see as a support level would be what we see as liquidity. So you see, even this initial bounce, even this initial bounce right here is an example of what we call engineering liquidity, as they want to bait people to see this as a support level. Therefore, there are now a new pool of stop loss orders under this low right here. You understand what I'm saying? So you now have even more stop loss orders under here. So they have this move, come in, tap into a continuation order block, move back to the downside, and you see we end up taking all that liquidity. And so everybody that saw this as a support level and they had their stop losses here, unfortunately, they got tagged out by me and my market maker friends. And when we take liquidity, we typically take it really aggressively, just like this. So they not even getting a chance to get out. Like, it's just nasty, right? And you see that we came in, we tapped into this bearish fair value gap, kept dropping. So everything good. Now, boom, here we are. Where do we go from here? Well, let's find out. So we're really close to this yellow line. You know that's the true target. But when you're right next to a target and you're trading at a time that especially is not really that ideal, like notice that this play is happening here at 7:0. Right now it's 7:08 a.m. Typically, there's not too much volume in the market at that time. So for me, expecting a bunch of liquidity targets to get hit when time does not align, for me is something that tells me, man, be careful, they might engineer more. So my eyes are peeled at this time. And when my eyes are peeled, especially, guess what time frame? I'm usually on a 15-second. Because when I'm at crucial points in price action, that's when I come down to the 15-second and I'm analyzing it like a hook. So let me tell you the first terrible sign that happened right here that told me, yo, this is not gonna work. This fair value gap right here on the 15-second, including this VI, but I'm gonna just put it to the fair value gap for real. This fair value gap right here, we should have never closed above this. And honestly, we should have respected under 50% of that, being this close to liquidity. So when you see this, I already know what's up. So guess what I did in this moment? Took off everything except the runner. I left the runner, and I left the runner just in case the runner wanted to react really to the bottom part of this green candle. But I already know how price be moving. So cool. You see what happened. I'm not even gonna talk about this. Some of y'all know what just happened on that, especially mentees. And now we move to the upside. And yeah, of course I cut my runner because I know what I'm looking at. This is how I'm able to get out at the bottom of plays. And that's why it's important to know the lower time frames. Because if you're somebody that's just watching like the 5 minute or something like that, you're just now finding out it's a reversal by the time we all the way up here. Like versus I'm getting out my play inside of here at the very bottom. And you got, other people that's not understanding how to analyze lower time frames, you're still holding on to a reversal. And so that's just dangerous. And so I do encourage you to learn price action, which of course is what we do at BTSMC anyways. But I encourage you to learn it in detail and don't shy away from those lower time frames, because everything that applies to the 1 minute, the 5 minute, the 30 minute, and the 3 hour, I don't care what you trade, price action is the same on every time frame. So that's the first thing. So cool. That's the morning play. Money's already made, and I already hit, profit targets and stuff. So I'm good. I'm like, all right, I'm cool. What's going on already for the day? So at this point, I'm ready to be cautious for the rest of the day. Like, I'm not really feeling like I need to force anything. I was like, okay, that's a good little wake up. So that's some gems we could take. Now let's move ahead to that's still messing up. Here we go. Nah, because Trading Views replay was acting mad weird earlier, but I guess it's still acting weird. I have to reset it like this. So basically, when it comes to the 9:30 open, I'm gonna talk about one more play with y'all. When it comes to the 9:30 open, it was a mess. If you guys remember Friday, it was really choppy, as y'all can see. This is really starting from like around 8:30, and it took us all the way to 9:30. It didn't get any better when New York really opened up at 9:30. Didn't get any better. And so we move out of here, and consumer sentiment is at 10 a.m. So there's a news event dropping at 10 a.m. So I know there's going to be an influx of volume coming into the market. And so you got to be careful trading news candles. So I'm like, and a lot of times before the news happens, there's some manipulation that goes on. And so I'm keeping my eye open, and I'm being cautious on where I want to enter any type of play. All right, so based on the higher time frame, I noticed that, well, I believe we're going to trade higher to this hourly. You see the hourly highest body, which I told you is a target. And let me go there real quick just to show you what I mean. So basically, as I typically tell y'all, it's important to know that liquidity, yes, can be taken by price coming above these highs. but it doesn't have to. Sometimes price targets the highest body at a swing point, and that's all it wants. Or it might target the lowest body at a swing point, and that's all it wants. So I always mark off, and it's really contextual, and it depends what's happening on the left side on whether I know we're going to go to the lowest body or we're going to actually attack the highest part of the wick. My fault. I meant to say highest body or the highest part of the wick. So it's situational on what my expectation would be. In this situation, I'm definitely eyeing the highest body here. And one reason of that is we're in a range. So in a range, a lot of times, that's the point of a range, right? We don't really break out. So I wouldn't be surprised to see us hit the highest body and come on down. And plus, if you notice, we have these relatively equal lows here, which is what? Now liquidity that can be targeted. All right, cool. So you got to be cautious. So as we're coming up to this area, we might reject it. So that's why here we are. I'm not in any trades. I didn't catch any of this run up in the morning. Nope. As I'm waiting on consumer sentiment in this context, because once again, I didn't really like how we moved out of that consolidation. So by the time this happened, I was like, oh, I already missed this run up. Yeah, I got it. So now I'm just waiting for the news to drop at 10 a.m. All right, so cool. Price is running. Oh, my fault. Well, that's the 10 a.m. candle. So, well, that's 9:59 and 30 seconds. Let me be clear. But do you guys see that it came to the highest body, to the tick? To the tick. That's exactly where it came to. Then it rejected. It came down, swept all this liquidity. And so, what is that, 10 o'clock? All right, swept all this liquidity right here that exists on this time frame. You see what's going on? Cool. Cool. Beautiful, beautiful. Everything is looking good. By the way, I didn't take rejections here. I did not take this rejection. I waited for the news candle to settle in because remember, I'm on the 15-second time frame right now. So you got to kind of picture it in live action. It's like, you know, this happens at 9:59 and then 10 a.m. comes and we just come down immediately. I'm like, oh man, I'm waiting for confirmation now. But what did I tell you guys about when a move doesn't have fair value gaps in it? That's suspect, ain't it? So there's no fair value gaps in this move. So I'm like, I don't really like this. Like, how are we taking all this liquidity without fair value gaps? I'm watching the 15-second right now. I'm like, all right, we keep like wicking up, wicking down, wicking up, wicking. It's a nasty move, but it's moving down. All right. So I'm like, hey, maybe because we're not leaving fair value gaps here, we're just sweeping this. So this whole section of liquidity, we're just sweeping this so we can make a move higher. All right, so let's see. All right, so when this candle comes, I'm like, oh, I know what's up. We about to run up. Cool. So I get in at this time for buys. Oh man. Oh man. All right, cool. Everything going good. Everything going good. All right, cool. Now you see this candle here made me nervous. I'm like, yo, I don't why. Like, bro, if we're bullish, there's no reason to be this deep into this fair value gap, as well as we shouldn't invalidate it. So currently it's still being used because bodies are still holding it. Because bodies are still holding it, it's being used. So I'm not stopping myself out yet. But then, boom, here we go. I stop myself out. But if you think about the loss, if I'm getting in right here and I'm stopping myself out right here, you guys can see I'm risking a few points on this trade. So this is an example of what I mean, where when you're watching price action and you're looking for specific things and you know what to look for, you can keep your losses extremely small. I didn't give back all my profits from the 7 a.m. trade. Like, nah, I lost maybe 2 or 3 points on NASDAQ right here. I said, cool. It didn't do what I wanted it to do. And you see how I avoided a bigger loss because now it's coming down. I'm like, see, I didn't want to be a part of that. All right, so boom. Now, for me, I don't like the downside movement. I also didn't like the upside movement. So now, to me, we're probably going to chop. We're probably going to chop in this area because of when price is bearish, it moves a certain way, and price is bullish, it moves a certain way. It doesn't invalidate both sides unless you're probably in some type of a chop, in some type of a chop session. All right, so now we have a bullish OB. We see that forming, and we're looking for confirmation on that price we use it. Trading View acting annoying again. Hold up. I don't know what's up with Trading View today, y'all. We got a contact they support team. They acting weird. But in this bullish OB, the way what price did on this green candle didn't make me want to get in because I wasn't seeing confirmations on a lower time frame. So I'm not a fan of this. I'm not a fan of this. But ultimately I see that it worked out because it brought us to the highs. So I'm like, all right, this bullish OB worked out, but I wasn't able to be a part of this move. So I'm kind of saying cash. And at this point, we didn't break out to the upside. So my point in showing this part of the presentation is to show you guys that bullish things are not working out properly and bearish things are not working out properly. And this is probably one of the most important things you could hear right now. So I really want you to pay attention. If you're noticing very awkward, weird delivery on both sides of the market, you're probably getting ready for a consolidation because price does not move like this when it's trending. After tapping into this bullish OB, after being a first of all, the move down was very nasty. So I'm like, all right, the move up better be clean and it better break out. This is a clean move up. I like this, but why are we not breaking out? We probably about to be in chop because why would we? There's no need to do all this. So what you need to do in time periods like these is you need to set alerts above and below consolidation. And that's all. And then just wait for your alerts to get hit. So when we leave these lows, we're not leaving it with fair value gaps. So I don't trust this as a real breakout. So did I get in when we actually left those lows? No, I ain't get in. Cool. So when I'm noticing this, I'm like, I know what's up. Notice that it's 10 something a.m. and I already know like, yo, it's about to be a chop day. I protected my capital, y'all. I protected my capital. I took one more trade that day. I don't even know if I have time to show it, but I took one more trade that day that was a successful trade. And that was it. I'm preserving capital because I already know the type of condition we about to be in, and that's from paying attention to price action in detail. So I want y'all to like keep that in mind. That's how you don't get caught in chop. But I do think that you have to have a level of like you have to really understand price action deeply to know whether or not it's delivering in the proper manner. But you know, once you kind of understand price action, you'll know like, yo, stay away from time periods where we're not delivering in either direction the right way. Because for anybody that was a part of the market on Friday, you know that it just chopped. It straight up chopped. It was nasty. Like this is what Friday was right here. Nasty work. And then we had like a breakout at 3:55 p.m. Even the movement, even when it was moving up, you can see it's a nasty move up. And then we broke out, like I said, like literally in the last 5 minutes of the market. This is a 3:55 p.m. candle. We were chopping the whole time, and then 3:55 we break out, and then we close the day higher. But nobody's trading at that time, so that's that. All right, so those are takeaways from last week. Hopefully, I got something out of that little demonstration. Now let's go ahead and go to the actual what we expect out of next week. What do we expect? Well, this week, my fault. What do we expect out of this week? So you know how we do. We got to go to the weather report. What is the weather looking like in the market this week? So Monday, nothing scheduled. What does that sound like? It's not the Monday of non-farm payroll week, so we don't expect a lot of movement. And there's no news events. So Monday to me just sounds real nasty. It sounds rainy outside. It sounds like we might even have a tornado. Expect chop, like Sha said, ugly market conditions. Exactly. Now Tuesday, consumer confidence, not really nothing to talk about. And guess what? It's the day before a holiday because I'm tweaking. I'm on the wrong date. My bad, y'all. Why ain't y'all say nothing? Like, come on. So Monday here, either way, we got Fed speakers, so it still seems choppy to me. This is actually what it is. Monday right here, my fault, y'all. It's nothing scheduled. So it's Fed speakers. Tuesday, we got retail sales. That's not bad. So Tuesday might be a decent day to trade in the morning, but I want you to be careful trading Tuesday afternoon. As you see, it's a bunch of Fed speakers, and the next day is a holiday. It is Juneteenth. Happy Juneteenth, y'all. It's Juneteenth on Wednesday, so you know that's the day before holiday is not really favorable typically. Thursday, there's nothing really to talk about. So, and then when I look at Friday, it's like, all right, we got PMI, but ultimately, y'all, unfortunately, this week doesn't look too energetic. It doesn't look too trendy to me based on the events scheduled, as well as where DXY is at, which we'll go to right now. So now when you look at DXY, and we talked about how to recognize chop, when you look at DXY and we talk about both the bullish and bearish delivery on DXY, you see that it's been, you know, a little bit of a chop. It's been 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 back and forth. That's why it's been in a consolidation. That's why every week we have different, different biases on DXY, because it's not really going anywhere. And so I just want you to be careful when it's, because when DXY, which is the US dollar, is in a condition of consolidation, it keeps the whole market in a state of consolidation largely, or the price action just may not be too favorable for you. So I want you to be careful, because even this day here on Wednesday, which was CPI and FOMC day, this past Wednesday, you see that we came all the way down, traded even under the fair value gap. Bodies held it though. Surprisingly, by the way, bodies held it, which is once again a signal that we're probably in consolidation, because unlikely things are happening. I would not expect bodies to hold this fair value gap. I would expect us to run under these lows in this context. So seeing bodies hold this is just like, I already know, like, this is not a favorable area of price action. I wouldn't be surprised to see DXY come right back down into this trend, into this chop rather. And I'm not really bullish on DXY, but I'm also not bearish on DXY. So I want to make that clear. I am neutral on DXY in its state of delivery right now for the reasons listed. So I just want you to be careful of this condition, and we want to wait for DXY to not only create fair value gaps, but respect the fair value gaps that it's creating to really get a determination on what it's trying to do. So just be careful about that. And then we have the 2-year bond. This was actually part of my watch, which is funny. I was going to say that as I expected to take these lows next. And you see so far here, the futures just opened up like, what, an hour ago? First thing we did was gap down, and we're extremely red, and it looks like we're coming for these lows. So even with that, it's like for the 2-year bonds, if they're trading down, that usually takes the NASDAQ down as well. So I'm just saying that I have, at least for the first part of the week, somewhat of a bearish draw on 2-year bonds. I know this is just the hourly, but here on the daily, it looks like a sweep to me. It looks like we sweeping these highs to come back into this range, and I would pretty much target this fair value gap at first, and we'll see what it wants to do there. If it doesn't hold above the 50% of this fair value gap, to me, it's gonna make a move to take these lows down here. So I'm only looking for the upper half of this bullish fair value gap right here, if we're gonna use it, which would be bullish for the NASDAQ. So once again, if they're moving higher, then NASDAQ is expected to move higher. S&P 500 is expected to move higher. So we're gonna keep our eye on this for sentiment. So we look at the dollar, we look at the 2-year for some sentiment, and Bitcoin is something I low-key use for sentiment. And remember, we had this candle, my fault. Remember that we had this candle here, this red candle, which would have been a continuation OB that we will be using to take us higher if we're truly bullish. Notice that price was consolidating there, terrible sign. We pushed out of here with no fair value gaps, terrible sign. We didn't really take these highs, we just made equal highs, terrible sign. We come down with a bearish fair value gap, we respected it, and then we traded down. We respected it twice actually, and here we go trading down. All bad signs. But when I look at this bearish delivery here, we're not creating fair value gaps to the downside, and we also are not really creating them to the upside here. So to me, this is why I told you guys weeks ago, I do anticipate that Bitcoin is going to consolidate for a while before it makes its next move, whether to the upside or downside. I still lean towards it being an upside move, but I'm just saying that it's not in a tradable condition. So crypto traders, I would be careful, because I do expect chop out of Bitcoin before making its next move, which once again, I do feel like it'll be to the upside, but I would say wait for it to actually show you real energy above the highs that it just made on the daily. Show some real energy above these highs, and I'll actually believe in it. Anything on the inside of this range though is going to be nasty, and you got to be careful. All right, so that's Bitcoin. So Bitcoin consolidation, I use that for sentiment. NASDAQ, the dollar consolidation, not really a fan of what it's looking like. And then at least in the short term, the 2-year, we're bearish on it in the short term. So let's actually now take it to the, why is Bitcoin here? What tab am I on? My phone mixing my own stuff. I think this is tab I'm supposed to be on though. So all right, so let's actually take it to the NASDAQ now. Oh, actually my fault. I got different people in here. Let me briefly touch on some Forex for some people. So for the euro, I think it's going to continue making its down move, but I will want to see it reject this 4-hour SIBI that we just traded into. So I was looking forward to trade into this. I want to see it stay bodies. I want bodies to stay below the 50% of this 4-hour SIBI on euro. And then we could take those to run the lows that we just made, but as well as even have a continuation to the downside, which would point to the dollar itself moving higher. So we'll see if the dollar could keep its bullish energy that it's been having, because when I look at euro, at least euro dollar, I do believe that it's gonna be bearish, rejecting this area. And if it doesn't reject the lower half of this, then it's gonna trade back into this fair value gap. And I would have to see how it trades in here to say whether I get bullish. Because if euro comes in here and it looks like this, like if it, what's up, bro? My fault. If it staggers into this area, y'all, then I could say, all right, we may reject this fair value gap and then make a move back to the downside. But if it's trading into that with bullish fair value gaps, so with bullish fair value gaps, euro to me is gonna make a run above these highs. So the only how I'm like literally bearish on euro is if we reject the lower half of this 4-hour fair value gap, right? Like within this area, and then make a move to the downside. Other than that, I need to see how it trades to the very next one. But either way, that's my current draw on euro. And then for GBP or for British pound, I said if we don't hold the lower half of this far as SIBI, then yeah, right. So I had to leave myself notes because I went over so many tickets. So I'm looking to see if we can make a continuation down into this bullish fair value gap from, for your notes, you would have to say May 15th, because that's where I feel like we could go. But we would need to reject this if we do trade higher first, because of course we could just dump. But if we trade higher first, we really need to reject the lower half of this. And you got to understand what I'm trying to say, because if we don't and we come up here, yo, you may get caught in consolidation because TradingView is acting weird today, y'all. You may get caught in consolidation because this should deliver bearish delivery. We already had a run above highs and we're making a move to the downside. Coming back up into this range is just not a good sign. We need to see continuation right away, like right away. There's no need to come back higher like into this range like this. That means we're probably gonna chop around in here. So that's why I say the only how you should expect like trend or a continuation of downside is if we could reject this fair value gap on British pound. I'm almost done with Forex, then we moving on. I know that's probably the least popular part of my audience is Forex, but I know there's people in here, so I gotta say it. Now, when it comes to New Zealand dollar, same thing. I'm expecting exactly what the arrow says, rejecting this 4-hour SIBI to make a move lower. So that's what I'm seeing on New Zealand. We'll see if that play out. And then, yeah, I think I was saying we may sweep these lows and push higher. That's what I'm anticipating on US dollar, Swiss franc. So that's really Forex for y'all. Now let's go ahead and move to start with the S&P 500. But what I'm gonna do for y'all on the S&P is let's quickly put it side by side to the NASDAQ, so we can notice something very important that I need you to keep your eyes on when you notice stuff like this. So here's the NASDAQ, and the NASDAQ is on the right side. Notice that the NASDAQ, which is QQQ, everybody, if you're an options trader, this is the same stuff I'm gonna say for QQQ. And if you're an option trader, the left side of my screen is what I'll be saying for SPY. All right, so it's the same vibe, same thing, y'all. Don't think because I'm on futures tickers, I'm not talking to you. Talking to all my people that trade the S&P 500 and the NASDAQ. So if NASDAQ made a move above these highs, you would expect the S&P 500 to be making a move above these highs. Notice that NASDAQ is the only one that was bullish on Friday enough to take these highs and make a move higher. So for me to believe in that breakout, one thing I would want to see is if we could make a fair value gap right here, at least. Like, bro, we ran these highs and we're not even running it with no fair value gaps. And even right now, we starting to close in this gap to the point where if we come and touch the high of this candle to the left, then guess what? We're not even gonna have a fair value gap right here. So right now in futures, if we keep trading down right now for the next hour and we touch the high of this candle, that means we're not even gonna have another fair value gap. So now, how are we breaking consolidation? And I've talked to y'all about that before. How are we breaking a consolidation without fair value gaps? That's very suspect, right? So then you should be wary of NASDAQ making a move back into this range. And we already engineered, remember the same lows? Remember I took this play? Remember my 7 a.m. play? remember we engineer liquidity down here. So I don't feel like we engineer liquidity for no reason sometimes, right? So I wouldn't be surprised to see early in the week a move back down to take these lows, because I still think there could be some potential downside before our next move back up. And let me reiterate, before our next move back up, because I do believe whatever dip comes into the market is going to get bought. Because as I told y'all in the free community, I did tell y'all that I believe that we already made the low of June. So any dip to me is going to get bought up. So even if early in the week we come down first, tap into this bullish fair value gap on the daily, and then make a move higher, that's cool. Because whatever the low of June is, I believe is protected. And I have a reason for that. That's not me saying it off my brain. That's something that I teach my phase 2 members. So based on that concept, probabilities say that we already made the low of June. That's what probabilities say, high probabilities too. Now, if we have an outlier type of month, okay, but I'm telling you my expectations based on statistics. So cool. So that's why I believe every dip will get bought. And when you look at the move up, look at this whole move up on NASDAQ. Nasty, right? We got no fair values in this whole move up. That's just super extra suspect, especially when the S&P 500 also never even took highs. So one thing I could see on the S&P is I wouldn't be surprised to see a move to sweep this buy side right here, this buy side liquidity where I have the yellow line. I wouldn't be surprised to see a sweep of that, to see a move back to the downside to start the week. So just be wary of that type of move on the S&P. I believe we may, like I say, come back down first. And yeah, I said that. I'm gonna put it back to one screen now. So that's SPE. You guys know the expectation on NASDAQ. Like I said, I'm watching for that. So, you know, if it doesn't happen and we keep running, then you guys see the target on NASDAQ. So I told y'all this weeks ago. First of all, let's zoom out for a second and let's remember on NASDAQ what really happened. There's been 2 weeks in a row that we called the absolute low of the week. Like 2 weeks in a row, we called that on a Sunday, a day like today, where the low of the week will be. So I'm not saying I'm gonna try to do it for a third week in a row, but I will just say that, just know that we're pointing to the most probable areas of price action. So last week, when we come in last week and we say, hey, you know, the most important place in price action this week that we're gonna have to look for reactions on is this RB right here. We're looking to see if we'll hold this. If we close under this red area, then we can expect a further move down. That was last week's plan. If we don't, then expect to move up. And we already had our targets from previous weeks. Oh, I already erased it, my fault. But I said 19,506.50. You know, 19,506.50 was the target we had or whatever. We already hit that. And remember, we're at all-time highs. So, you know, calling targets at all-time highs is also something that's able to be done when you understand certain things in price action. So the second target I have is 20,312.50. We're going to change contracts this week on futures. So this number is going to be inaccurate because we're no longer going to have the same price levels when we change contracts. So I know not everybody's familiar with that, but we will be changing contracts. So I will have to give you an updated number. So I wouldn't even write this down because I don't think we'll get here over the next couple of days. We're going to have to change contracts and I'm going to have to redo, you know, my methods to find out where the second target is. Understand? So be careful with that. And I gave you the second target update, at least for QQQ. So you could watch QQQ as well. I put those targets in my free communities in my channel. But regardless, my point in saying that, y'all, is that because I have a direction on price, it makes sense to like focus on a point areas of price action, such as this POI that could run us up to that first target. Now that we got there, cool, price could retrace and then run us to our second target. So you just got to be like open to those scenarios. All right, so that's the expectation. Is there anything else I want to say on NASDAQ before I move on? I'm trying to think. What else would I say about NASDAQ? Oh, yeah. So, by the way, let's say this plays out to the downside and, you know, we make this move lower and we run these lows. I don't think that price is going to... let me think about what I'm saying real quick. Go to 4 hour for a second before I speak. Hold on. Yeah, nah. So, okay, my fault. I had to think for a second. So basically, my people, right? if we do make this move to the downside, I don't feel like we're going to bounce in this POI, but I absolutely would be watching the lower time frame charts to tell me if we're gonna just simply sweep these red lows, tap into this red rectangle, and then make a move higher. I would only know that at the time because it depends what this down move looks like, and it depends how we take these lows. That will let me know if I'm expecting a sweep or a continuation. So if the candles are doing what they're supposed to do at that time, then where I think we would go next and get a bounce from, the likely bounce for me would be at this hourly fair value gap down here from 8 a.m. on Wednesday, June 12th. All right. So if it looks good in this area, then I would look for the bounce there. And that bounce will be the one that I think will take us to our next leg up. All right. So that's that. All right, so that's the plan. And like I said, if we just continue higher, then you know where we should be going next. But just be careful trading like impulsive moves, and make sure that you let the market open up with some fair value gaps and stuff to start really believing in that. Because to me, it's really suspect anytime we making legs, anytime we making price legs with no fair value gaps. I'm always suspect of them because I know we can make a whole sweep of that whole area. So that's that. And we had a whole session about that a couple of weeks ago, if y'all remember that lesson. So cool. That is the Dow Jones. I say be careful of. Dow Jones looks like it's a consolidation. Both the bullish delivery is nasty and the bearish delivery is nasty. The dollar is consolidating. We talked about all these things consolidating. So be careful trading the Dow. I wouldn't even touch the Dow. For me, what I would do on the Dow is I would set a price alert above these highs. I would set a price alert below these lows, because I think under these lows, we would trend to the downside into this wick. So the only clean moves on the Dow, in my opinion, exist under these lows, and clean moves exist over these highs. So other than that, I don't want to look at the Dow. And I told y'all same thing with the Russell. I'm not trying to look at the Russell because both bullish and bearish delivery was nasty. And so I said, for me, I said I would stay away from the Russell. So nothing to talk about there as well. Did I even look at copper today? I'm trying to remember. I don't remember looking at copper, so I'm gonna skip that. I don't know why I feel like I didn't look at copper, but anyways, let's go to CL. So CL, you see with the arrow. So this is oil. That's what I expect to happen on oil. We talked about this SIBI getting traded through, and we didn't say that when it happened. We said that on Wednesday, June 5th. We said it. Yeah, I don't think that this fair value gap, if we come to it, I don't think we're gonna use it. And yeah, see what happened. We pushed through that whole thing, and that's what I mean with, if you learn smart money, you're gonna learn what a fair value gap is, and you're gonna try to take trades off of every fair value gap, but you have to learn context. Some people was trying to take trades off of this and go to the downside. It's not gonna work. You got to know which ones to ignore. This is not a fair value gap to be taken to the downside because of context. So we had a bullish expectation on CL, and I'm still looking to see it take these highs next. I just think we may retrace before we take those highs. So areas that we could retrace to would be the bullish fair value gap right here. And I'm gonna go ahead and delete this because we don't need that no more. That was just to show y'all that like it played out. Now I will look at this area right here, and I don't want us to trade back to this bullish fair value gap. So I don't want to see this get traded back to right here. If that gets traded back to, I think we're gonna run the lows. That's when I would actually get bearish on it. But as long as we hold in this one and maybe even some of this red candle, then I'm cool with seeing it like find its way back above the yellow line, back above buy side liquidity, basically. All right, so that's CL. That's what I'm expecting out of CL. Gold, you got to be careful. Consolidation, honestly, like nothing much to be said here. Both bearish and bullish is nasty. You can see the state of the market right now. It's not looking too hot. Same thing. For platinum, if you trade platinum, I said moves above and below previous week's low and high only. So look at last week. And let me not just say it. Let me explain why I'm saying it, so y'all could get takeaways and learn. We not just hearing the watch list, we learning from the watch list. So I said only moves above last week's high and low because last week we left a fair value gap here, right? So basically, if we truly are bearish, if we come into last week's weekly fair value gap, we should be expecting to reject it, especially on the lower half of it. So there's a POI in that area. And to the downside, I think if we lose last week's low, we'll make a pretty decent move, at least into conservative target would be the lowest body on the weekly, right? So remember we talked about the lowest body at a swing point. So you see this swing in the market, the lowest body is a conservative target for you. If not, and we keep trading lower, I mean, you can clearly see we have a nice buildup of liquidity, so it can make a pretty nice move to the downside here on platinum. So either way, that would exist under these lows, and we would have to take those lows with fair value gaps. And so we have targets to the downside under these lows, and we have a POY to the upside above those highs. And if we invalidate this bullish fair value gap, right? If we bearish. If we invalidate this bearish run, we're probably gonna run into these highs, all right? And Lady Kel said we've been holding the daily SIBI. Yep, this exactly. We rejected this one, came on down. Oh, another reason I said that, I remember this. Another reason I said that, y'all, is because we've been engineering liquidity. So always be suspect when we're staggering down. So don't be surprised to see us sweep these highs, tap into this one, and then make a move back down. Just it doesn't have to happen, but just don't be surprised. That's why I say, yo, just to be safe, it's just safer to simply take the trades under last week's low / above last week's high. That was another reason I wanted that. But yeah, I think the higher time frames, like when I go to the monthly, that's where I get my direction from, the monthly and the weekly. The monthly and the weekly both tell me platinum has more downside. So when I look at, even though they're both consolidating, right, it's not like the cleanest, to me, I think has more downside. And another reason for my rationale is if we were bullish, chances are we would have bounced at this weekly bullish fair value gap, but we rejected it. We didn't reject it, we traded through it. And so since we traded through it, that's like a form of confirmation for me. Like, yeah, so we most likely price is targeting sell side. So higher time frames is telling me to stay bearish on them. So that's why I'm looking for bearish setups on the lower time frames. You feel what I'm saying? So yeah, so that's platinum. Now here is SPY. Did I have anything to say on SPY that I didn't say on ES? I think I maybe just showing this to say, like, you know, the weekly, the second target that we have from SPY was 555.36. We already hit target one. And once again, these targets were given weeks ago. We didn't just know this targets was given before we even took all-time highs. Like, we've been given these targets for a while. So we got first target here, we hit that. Second target, 555.36. Let's see if we get there next. And QQQ, the second target there, is 485.61. 485.61. Now, for QQQ, if we do not hold, like, put like this, if we come to this gap, I expect it to fill out the whole gap. All right, so if we do come back to this gap, I think it'll fill out the whole gap, but I think that you may see bounces under the gap. So don't be surprised to see us fill this gap, but it doesn't really want much more, because I wouldn't be surprised to see after that, we trade right back to the upside. So if QQQ happens to come back to this gap, it'll fill it out. And that's important for me to say, because not every gap gets filled out. And I don't want you to have that expectation. Sometimes, you've all seen it, we trade to a gap, and we bounce at the gap. And there's a reason for that. It has to do with it being an inefficiency. But in this context, I do expect the gap to get filled out. So if we do trade here, I expect us to fill it. Now, I could always be wrong, but that's what I see happening in price action. And the reason I said if we trade there is because we would have to get past this first, because we could absolutely use this POI here to go higher. So that's why I said if we actually get to the gap, then that's what I would see. Because our first line of defense is this VI. That's our first line of defense on QQ right now. All right, so now I'm gonna get to like more of like a option segment, like just going through tickets. I'm gonna try to fly through this as quickly as I can, because there's like a handful of tickets I'm gonna talk about that I think is gonna make some clean moves, Like, and I'm looking to trade these. I've been doing a small account challenge, and the account is up 126%, and so that's why I really went in depth to find just plays that I feel like could be simple, easy, base hit plays. So here we go with American Airlines. Yeah, I think American Airlines, like, when you look at the monthly, where do you think the monthly is going? When you just look at the monthly, seeing that we have rejected this bearish fair value gap here on the monthly, and you can see that this is real price action. Look at how it filled it out to the tick. Being that it's an inefficiency, it's a gap of fairness. We filled the gap. And so, yeah, we reject this in a premium, trade to the downside. It's just like, if you looked at the monthly, you had to put your money on it. You ask yourself, like, wait, where do I think American Airlines is going? And it just seems like a base hit play is just to take it into these lows. So now, if the monthly gives me a direction, it's just like, all right, I want to trade into that move. But the risk reward is a little bit off. You could probably take a scalp or a day trade into it if you wanted to. So when we stagger into moves like this, I'm always wary of a sweep. So if we did sweep this and come back into this area, the minute I see a bearish fair value gap back to the downside, that's when I would get involved and I would take it into those lows. If it just drops right away, I probably won't take it because it's already right there. You know what I mean? And the risk reward is a little bit off. Maybe on a lower time frame, it might look all right. But you see this type of price action, I'd rather see a move above buy side liquidity before getting involved on American Airlines. But there's a potential there. Apple, I just wanted to show on Apple that we had this target that we put in the community, and you see that was the top so far. Now, if Apple, what was I going to say about Apple again? I think I wanted to see Apple hold this fair value gap. Like, if Apple comes back in here, I think Apple uses this fair value gap below to take us to the second target on Apple, which is 235.15. So remember, I had first target back when Apple was down here. We got there actually in one day. That was like a 14-point move that day. That was crazy. Got there. Cool. Now it's retracing a little bit. Look how the retracement is nasty. There's no fair value gap to the downside. So that's already showing me, like, I don't think Apple's done running up at all. I just think that we're going to get a quick retracement before moving back higher. You have to be wary of your first line of defense in this case, which is the very first fair value gap. So of course we could bounce here, but if we don't, I do think Apple will hold this area, and it will hold. And that's where, even if you're just an investor, I think it's a solid place to get involved on Apple. But this is not financial advice. This is just based on probabilities. All right. Now Adobe, let's fly through some more. Let's fly through some more. Adobe, I'm only doing this for as an investor, but let's learn through the technicals. So I don't know if y'all remember this, but on the Watchlist, I said I think the next place Adobe is going is to this monthly fair value gap. So the monthly told me that. And guess what, y'all? We got there. Beautiful. Now, look how we filled out this monthly fair value gap. And after we filled it out, what happened on the weekly? We just had a huge candle come out of that. That's the first sign of some potential confirmation. So this is when you start looking to get involved in the play, because the monthly POI is now starting to see some validation on the time frames below it. So that's why here on the weekly popped out. This is what the daily looked like. We got this earning gap on the daily. What I want to see on Adobe is us hold the upper half of this gap. I'm cool if we trade down to the 50% of it, but ultimately I want to see us hold the upper half. I don't want to see Adobe come back in really much below this. Like, if we start coming to like the 75% of this gap, like, bro, we're coming back to these lows. So it's just bad signs. But if Adobe could hold anywhere in this area, and then I think Adobe's coming back to all-time highs. You feel me? Because this monthly fair value gap to me is going to take us above these highs. And if we come above these highs, I believe we're going to take all-time highs on Adobe. So I think this is the low Adobe wanted to make before making his next leg up. So let's see if we call the downside. Let's see if we could call the upside on Adobe. Options may be tricky for that, but even if you're just an investor, I think it's something to look into. But this is not financial advice. It's just probabilities. Okay, now let's move on. What else do we have a red flag on? Red flag is green though on my book for my watch list. So if you see a red flag on the right side of my screen, it means it's something I'm looking at. DraftKings. What were you saying about this again? So many tickets that I went through that day. So DraftKings, I think that weekly, I think I had like this weekly bullish OB, and we getting a nice reaction out of it. So we had a bullish OB on the weekly. It's reacting exactly where I wanted to, and that'll be pushing out of it. Something I didn't really like too much was the lack of bullish fair value gaps on the daily. So I'm suspect about it. And that's why I set alerts here, because if we clear these highs where my alert is at, meaning the highs of the swing point right now, then I think we're gonna have continuation to the upside. So that's why I have an alert there. And I have alert below this because if we lose those lows, we're going to come into a 4-hour bullish order block, a 4-hour one. So yeah, I hope you guys could see the top down analysis, you know. And Latoya said for Adobe, she loves fibs, and she said that it's bouncing off the 61.8 fib. So she believes that it's going to 638 with time, and that's good. I got some confluence from Latoya. I'm glad to see that because I know some people use the fibs in that manner. And look, 61.8, I know is a great level to bounce off of. So Adobe, you got even more confluence. So it's something to look at. I hope you guys like. I hope it works out for us. So all right, so if we do tap into this bullish order block on DraftKings, and I like what I see, then that's a move to me that could be made back to the upside. So that for the downside, if it trades down first, this is the POI to look at. The 4-hour bullish order block, these two red candles. If it trades to the upside first, this breakout over these highs could have a continuation. Just make sure that there's fair value gaps in that breakout. That's all I could advise when you're taking breakout plays. All right, now, next ticker, Flex LNG. I don't remember what this was, but when I looked at the monthly, this giant did not look good. On the monthly to me, I feel like it can make a move down. Low-hanging fruit objectives will be taking these lows here at 24.84, 24.21. I'm just kind of looking at those areas. The weekly look really good to me. We're invalidating bullish fair value gaps. When you look at the weekly, this is the type of liquidity that we tend to take really quickly. So I think it's going to make a nice move down into these lows. And if we take these lows, we may go ahead and take the swing point, but I'm not going to fall in love with that. The low-hanging fruit objective is what? Y'all should be finishing my sentence right now. The low-hanging fruit objective will always be the lowest body. So I really could take the lowest body here, but I don't think it would stop there simply because if you look at the daily chart, these triple bottoms is nothing but liquidity. Like these relative equal lows, like I think if we come down this low, we'll at least take this liquidity, at least. So 24.84 is where I think that ticker is going. Shah said lowest body doesn't have to necessarily sweep wicks. Oh, exactly. Yeah, you were answering the question exactly. It doesn't have to necessarily sweep wicks. It can just come straight to the lowest body. Correct. So good. Now, First Solar. This is a super short-term, low-hanging fruit objective play. I just think daily lowest body is where it's going next. So I'm just expecting continuation here on this daily chart. So the daily is the higher time frame, and so you will want the lower time frames to respect the bearish tools. So what's the takeaway here? The daily gives you, my fault for jumping around, but look, the daily gives you a clear place on where it could go. In my opinion, it's fairly clear that we could come to the lowest body here. So if we're gonna go to the lowest body there, then what would I want to see holding in price action? Well, I like the fact that we're currently rejecting this bearish fair value gap on the hourly. So this is a trade idea that could have happened from Friday. Trading back into this hourly bearish fair value gap, rejecting it. So let's say they gap down tomorrow. You wouldn't be even surprised to see that because you already understand that it's trying to get to the yellow line in the first place. So to seeing the gap down shouldn't even be a surprise to you if it happens. Now, if it trades back up, you still want to see it hold this area, but at least you know places you want to see it hold. I don't really want to see it come back to the fair value gap above it, though. I don't want it coming back up here. Being that we're this close to the target, the tools that we have that are close to us in price action are the high probability ones. When we're close to a target, you don't want to see, these are like certain things I talk about with signatures. You don't want to see price come back, way up here just to send you back like way down here. Like there's literally no need for that. So I'm looking at tools that are close to me in price action, PD arrays, tools, whatever you want to call them. So yeah, we'll watch that on First Solar. Home Depot here. Home Depot, I think, is continuation to the upside here, coming off this monthly fair value gap. And I don't know who remembers the Home Depot play we caught a couple months. Was it a couple months? Whatever. It was from up here. So yo, we taking Home Depot into this fair value gap. This is a beautiful play. It died into this monthly fair value gap, and ever since it got there, y'all, it's been staying put. And honestly, it's pretty much been holding the 50% of that monthly fair value gap, which is a good sign for some potential upside. There's also an order block. See, these three red candles make an order block. Order block is not, and I repeat, I have to always say this because there's so many misconceptions. Order block is not just the last candle before impulse move. No, it would be all 3 of these consecutive candles. So yeah, so we are reacting off of order block right now. That's a monthly POI. The weekly is showing some good signs. We already got a sweep below sell side. We're making a move higher. So I think continuation over these highs right here will be really nice, because closing over these highs is a great sign for upside. Great sign for upside. So Home Depot, to me, if it makes it above the highs, which I think it will, because I think we're going to use this gap as a level of support or something to bounce on. Let's really, oh my God, let's really talk. I got so much I be wanting to say, son. Let's really talk, y'all. Let's really talk. So this gap is an inefficiency. This gap is something we could use to take price higher. Price does not have to fill out gaps all the way. So think about what happened here. Price, this is the gap when price opened up. Price opened up right here. That's why I made my rectangle right here, because this is where the candle actually opened at. So on this day, what the candle did was it came down and filled in some of the gap up. It came down and it closed, boom. But remember, this is the overall gap. Now, what happens? Where do we bounce? Where do we bounce, y'all? To the tick at the 50% of that gap. That's not an accident. That is a signature. Those are things we teach. Those are things we look for to take price higher. So I love the fact that it bounced to the tick at 50% of the gap. That is exactly what we want to see to expect some potential upside on Home Depot. We could be wrong, of course, but probabilities wise, I like Home Depot making a move higher. And if you just want to be safe, let Home Depot create fair value gaps above these highs. And then I think Home Depot could make a nice move to the upside. And this bearish fair value gap here, because some people might notice this and say, but yo, there's a monthly bearish fair value gap. Like, do you think we'll reject that? No, I don't. In context, I think we're going to trade past it and take these highs. In context, I don't think Home Depot is going to reject here. I think we're going to be bullish on Home Depot. But yes, you have battle of the fair value gaps. You got a bullish one, you got a bearish one. Who going to win the war? I think the bullish one was going to win. But let the lower time frames tell you. Wait for confirmation. Let the lower time frames tell you who's actually going to win. I don't think I was in love with Goldman Sachs, so I might skip this one. I don't think I was in love. There's an arrow there. Y'all can see my expectation. I think I wanted to go down first. So I think I wanted to go down first off memory into this bullish fair value gap. That's it. And really, this BTSMC, I wanted to come to this BTSMC, this discount BTSMC, to go higher. That's what I'm expecting out of Goldman Sachs, but I wouldn't trade downside personally. I really honestly would set a price alert in here so that I would really look to trade the upside. I don't want to trade the downside. I want to trade the upside on Goldman Sachs. So we'll probably revisit that one. Latoya said Home Depot is fire. Yeah, I think so too. It got mad potential. Lucid, I think, is gonna make a move to take these lows on this weekly. I love where we rejected on the week of June 3rd. I love that. That's a beautiful rejection. And the reason I'm saying that is because of this wick. It rejected on this wick exactly where it's supposed to. Now we trading down. What is this? What is this yellow line? What did I say here? Let's learn something. I said this prevents the SIBI creation. So I would love to see a fair value gap come out of this week's candle, meaning we should have a red candle this week on Lucid. So if we open and we trade higher first, it needs to come down pretty shortly after. That way, I could draw a fair value gap here next Sunday and say, hey, y'all, we made that fair value gap. So if this week opens up and we touch up here, guess what? There is no fair value gap, right? It's going to be a green candle and we touched the low of the previous week. So therefore, there is no fair value gap. And I know I talk about fair value gaps a lot. If you're unfamiliar with them and you've never heard of it, or you don't know what it looks like, you should go to my Instagram. I made a quick video that explains it in 20 seconds what a fair value gap looks like. So go to my Instagram. It's at BagTalkTerrell. That's Tyrell. But all right, we almost done. Y'all. Don't worry. We almost done. So McDonald's, I think, makes the monthly is telling me that it's going to make a move under these lows. So you see where I set my alert at. I set my alert right here because I think if we come back under Friday's low, because they could do whatever they want, right? Like McDonald's could do this on Monday. They could do this on Monday, Tuesday. But once we come back under these lows, to me, it's going to run these lows. So I'm not interested in anything on McDonald's until it comes towards these lows, because I know if we take these Friday lows, I expect us to take the swing point lows. So that's why I say these are base hit plays. Of course, I could try to snipe McDonald's from the top, but I don't need to do that to make good money. I could literally wait till McDonald's is trading down here, because when it's down here, it's pretty obvious to me that it's going to run those lows. And if we run those lows, I believe we're going to run these lows. So I may leave runners to take these lows on McDonald's. So that's why my alert is right there. I will wait for us to take Friday's lows, and I look to take the lows right next to it. All right, so that's for McDonald's. I don't even know if this has good options contracts, but it's been, actually I'm gonna skip this one. I think I didn't want to go right. No, that's the Mosaic one. My fault. I'm thinking out loud. What did I want to say here? Weekly busy. I think we just targeting this weekly busy. My alert is right here at 27, because I think I was just thinking like, if we get continuation under Friday's lows, we could take 25.62. But that's the one I'm clearly not in love with. Netflix, I'm not in love with the Mosaic one. I don't even know if they got good options contracts. I just be charting charts for real, and then we choose the contracts at the time. Make sure you put time on your contracts, y'all. Netflix, the fair value gap we created. I don't know if y'all remember this. There was a watch list we talked about. Hey, who remembers this watch list, bro, on Netflix? We said if we break out of this consolidation with a fair value gap, we would like to see price hold the upper 50% of this fair value gap. And some of y'all are like, oh, we didn't hold it. What do we say in this community all the time? Bodies need to hold the area. Bodies. You see that the bodies held the upper 50% of this fair value gap. Beautiful. That's what we wanted to see for some continuation to the upside. And so now we consolidated here again. And now we're looking to see the same thing. I would like to see a fair value gap exist above this consolidation. You see where my price alerts is at. I'm actually in Netflix calls, and we'll see if it plays out. I'm already swinging Netflix, and I'm looking to see it continue to all-time highs. So we'll see how that play out. Yeah, just a few more, literally, like maybe like 2 or 3 more. So NUE, a new core, I don't know. I was just looking at the higher time frame and saying, all right, the higher time frame look like it want to take these lows. So I don't know what their contracts look like, but the monthly tells me we want to take these lows. The weekly looks really bearish. I think we're going to continue to the downside. I think this ticker could make some nice moves to the downside on the weekly time frame. If we somehow trade higher first, we need to reject this weekly SIBI. So if we somehow trade higher first, we need to reject this to come down, because if we trade above this, I don't want it. I don't want no parts of it. Because if we trade above this, to me, we're gonna make a higher move, and I don't want no parts. So if we somehow trade up first, we need to reject this weekly SIBI in order to see continuation back down to these lows. All right, so that's NUE. Plug. You have the one on your watch list too, bet. Yeah, I kind of wait till they give me a good setup before I even like look at them. They look good right now. And Plug, this was like a low hanging fruit objective one again. I think Plug makes a move under these lows to 225. You see where my price alert is at. I think for this, we have to reject this daily SIBI. If we trade up first, I got to give you the upside plan. If we trade up first, we have to reject this, because if we don't reject this SIBI, then I think Plug is going to make a move higher into this wick. If we don't reject this SIBI, Plug should come to this wick. So you have an if-then statement. If we reject this SIBI, Plug is going to run the previous lows. Plug is going to trade down to 225. But if we don't reject that, Plug should trade into this wick. So money can be made either way. So we want to see bodies obviously reject this area. Of course, remember that for fair value gaps, you want to see bodies reject those areas. I don't think I liked Roku, so I might not say it, but I will say I wasn't in love with it. But this is a potential on Roku. That's all I'm gonna say. That's a potential on Roku. And Snow played out. I was just showing our successful Snow trade. We called Snow from up here, and we said it's gonna make a move into the monthly lowest body. And how do we know that? So we can learn from it, because now that we see it played out, there's learning things we can take from it. Especially after the run above buy side like this, and we invalidated this BTSMC. This BTSMC is what we would have needed to use if we were bullish. So once price traded under that BTSMC, I already knew, okay, well then we're coming to the lowest body at this swing point. which is this lowest body right here on the monthly. So being that I know where the monthly is going, when I come to the weekly and the daily, it's pretty easy for me to say, hey, what could price use? So at the time on that watch list, we were right here. Notice that this green candle is a Friday candle. We do watch this on Sunday. So this is all we've seen. And the plan that week was, okay, guys, I don't want us to trade to this SIBI. I go back to the recording. I said, I don't want us to trade to this SIBI. I think if we trade to this SIBI, I don't think it's going to make a move to the downside. But if we leave this SIBI open, then I think Snow makes a really big bearish move into the monthly lowest body. That is exactly what the plan was. Did we trade into that SIBI? No. Beautiful. That's what we call a signature. That's what I would want to see the type of move that I was anticipating. And so the monthly told us where we're going. How does it get there? That's where you have to understand what price delivery would look like. But I think that was it, right? I think that was it. Basically, I think that was it. I don't think I was in love with X, but I expect a lower move on X and XSOM as well. I expect a lower move on XSOM as well. And that's actually it right there, because I know I done said a lot and my voice hurts. I'm tired of talking, at least on the recording. Anybody who's still here, I'll answer all questions and everything right at the recording. But if you're watching this on YouTube, make sure you subscribe to the channel first and foremost, and check the link in the description for this free community. We do free education in this community. I definitely want to tap in. So click the link in the description. And for my mentorship, if you want to learn the hows, like how do you do this for yourself? How do you become profitable? My mentorship is the one-stop shop for profitability. That starts July 8th. So your payments need to be in July 7th. You need to get in right away. It's limited spots. Please get involved. Tap in with us. But that's all I got to say, y'all. So that's all she wrote.